BHP has got its new financial year off to a good start. That's according to CEO Mike Henry. During the first quarter, group copper output rose 4%, driven by record concentrator throughput at the company's flagship Escondida mine in Chile. And while iron ore production dipped 1%, this was largely due to planned maintenance. Henry says that this momentum puts BHP on track to deliver on its full-year guidance. South 32 has posted better than expected manganese output for the first quarter. That's after a recovery at its Australian operations following tropical cyclone Megan, which damaged infrastructure last year. The miner says its South African manganese operations also delivered a strong start to the year. Looking ahead for the full year, South 32 has maintained its production forecasts across all its operations and says the firm's focus will be on maintaining operating momentum and capitalizing on strengthening market conditions in base metals. Zeder has reported a 22% decline in its half-year net asset value per share. The investment firm, which focuses on agri-businesses, has attributed the drop to the payment of a special dividend and the downward adjustments in the valuation of its unlisted investments. The firm says in light of ongoing uncertainty and volatility in global markets, it's decided to not declare a dividend, but it will consider future payouts when conditions improve. The Foschini Group has bagged a 12.7% rise in half-year sales. That's largely due to shoppers filling their carts online. But this growth hasn't filtered down to the retailer's bottom line. The firm expects interim headline earnings per share to be as much as 25% lower. More detail will be provided when the group opens its books on the 7th of November. Coca-Cola HBC has bought a majority stake in Coca-Cola Beverages Africa. The firm bought the 75% stake from Guche Family Investments and the Coca-Cola Company for around 44.5 billion rand. The deal creates the second largest Coca-Cola bottling partner by volume globally and paves the way for the group to list on the JSE. Coca-Cola HBC is already listed in London and Athens, but wants a secondary listing on the local bourse as a way to underpin its commitment to both South Africa and the African continent. It's hoping the listing will take place once its deal with Coca-Cola Beverages Africa is complete, and that should be in 2026. The World Platinum Investment Council has vindicated Sibanye-Stillwater's call for the U.S. to impose tariffs on Russian raw palladium imports. A recent note by the council said U.S. policy action against Russia would help protect domestic palladium producers while also tightening global markets, putting upward pressure on palladium prices. A growing body of evidence suggests that Russian state subsidies have allowed the country to flood the market with marked down prices in recent years, pressuring U.S. miners. Sibanye sounded alarm bells over the situation in July, filing petitions for anti-dumping and countervailing duties on Russian unwrought palladium imports. U.S. authorities are due to decide on the duties by January. Deepening supply chain disruptions, crumbling infrastructure and persistent inflationary pressures are set to push up transport and vehicle costs. This will put strain on consumers. That's according to Supergroup. The Logistics and Mobility Group says the challenges are driving up costs and that unless South Africa's transport networks and energy systems improve, logistics providers will be forced to absorb escalating expenses or pass them on to consumers. Further afield, oil prices settled at their lowest since early May as investors weighed a potential global glut, with U.S.-China trade tensions adding to concerns about an economic slowdown and weaker energy demand. Here's more detail in this package report.
Oil prices fell for a second day amid concerns about excess supply and risks to demand stemming from tensions between the U.S. and China. The world's top two oil consumers have renewed their trade war, imposing additional port fees on ships carrying cargo between them. tit-for-tat moves that could also disrupt global freight flows. U.S. President Donald Trump said he expects to reach a fair trade deal with Chinese President Xi Jinping, though key issues like tariffs and tech remain unresolved ahead of their planned meeting in South Korea next week. The head of the World Trade Organization is urging both sides to dial it back, warning that a long-term split between the two economies could shrink global output by 7%. Key global oil benchmarks, Brent crude and U.S. West Texas Intermediate, both closed at their weakest levels since early May on Monday. Oil prices have been under pressure after the International Energy Agency warned of a potential surplus of nearly 4 million barrels per day by 2026, as producers ramp up output while demand stays weak. The current pessimistic outlook for oil is likely to extend into 2026, with analysts at Goldman Sachs saying on Tuesday they forecast Brent prices may drop to $52 a barrel by the fourth quarter of next year.
And consumer goods group Unilever is delaying the demerger of its Magnum ice cream unit due to the U.S. government shutdown, marking an early example of business disruption from the impasse that shows no sign of ending. Here's more on this.
Unilever delayed the demerger of its Magnum ice cream unit, and the consumer goods giant blamed the ongoing US government shutdown. It's an early case of business disruption from the fallout in Washington, which shows no signs of ending. Unilever said the US Securities and Exchange Commission was currently unable to declare effective a key registration statement. It's needed for shares of the Magnum ice cream company to be listed and traded on the New York Stock Exchange. Unilever's ice cream business includes major brands like Ben & Jerry's and Cornetto. The group said preparation work for the demerger was still on track and progressing well. It also said it was committed to completing the spin-off process this year. The firm added further updates on the revised schedule will be provided as soon as possible. The US market regulator has stopped IPO reviews during the shutdown. Companies are normally prevented from debuting on Wall Street during periods when Congress hasn't approved funding for government operations. That's because officials can't review and approve registration statements. The current near 3-week shutdown has investors concerned it could hurt the IPO market, while the US government has said it may cost the economy as much as $15 billion a week in lost output.